Hi guys, welcome back to ValeTalks by Valetax. My name is Innocent E. Ferry Brian, Global Market Analyst here at ValeTalks. And today with me, I have my guest, as always, Manesh Patel. Hi, Manesh.
Hey, Ryan. How you doing?
Very much fine. So, as you all know, to our viewers watching from all around the world, we didn't have ValeTalks last week, and that was because we were all on a trip and we were at Malaysia, where we were celebrating the company at the V World experience. We had the gala and we had the concert where we invited over 7,000 of our Valetax users, clients, and members, partners, and staff. We had a great time. It was an amazing time. And that was why Manesh was also missing me on the other end. But today we are going to be discussing something very interesting, which is synthetic, trading. Yeah, we've come to a point in the trading world where synthetic indices it's been a clamor for by a lot of traders. We've seen a couple of other synthetic firms offer this style of trading or assets for trading. So the topic for today really is synthetic trading the future for traders, or is it just another hoax to keep traders hooked on trading, right? And that is why today with me, I have Manesh Patel, who is an expert when it comes to algorithms, AIs, machine learning. When it comes to trading, he's traded with institutions, banks. He's worked on the New York Exchange trading floor, and he understands a lot more about how algorithm works and whatever it means to create a market. And he's going to be speaking more about that and telling us if it really is the best option for traders, or the conventional trading is really where traders should make a bulk of their decisions and choices when it comes to trading. So Manesh, the popular question everyone has been asking is synthetic trading the future for day traders? Because a lot of day traders complain talking about how the markets are very unstable, a lot of fundamentals affecting the market. We have a lot of geopolitical tension affecting and influencing directions of pairs, a lot of, macros and all of those things. But synthetic indices are a bit more, subtle, just highly controlled market, basically faster responses and all of those things. Do you think that you would say it's an advisable option for day traders?
I mean, it is. It's another product you could trade, right? To give you an example, if you look at the S&P 500 that Valetax offers, the synthetic product there, right? And you look at it against the futures product. A lot of people can't afford the futures products because of the margin requirement, which is huge. And year by year, with more volatility, the margin requirements on the actual future products are huge, to a point the retail trader really can't trade them at all. So you have all these products now that are being created that allow an average trader to start trading various different products in various different markets. Most people don't know you could trade Australia for synthetic product, Germany, you got the Euro 50, France 40, UK, Hong Kong 50. So it gives trader the ability to trade multiple different products, and you don't need that huge capital requirement just to trade. So it allows you to trade more, whether it be more from a day trading perspective, swing, or long term. You now have the ability to trade various different markets that are available to the average person, whereas a lot of times a lot of these future products are more towards institutions. So it pretty much levels out the trading field, and it's a great thing that the brokerages and everyone are doing this, because now a retail trader could trade the same thing as institutions and stuff like that, whereas they weren't able to do before. So it levels out the playing field, in my opinion.
So if synthetic indices, right? So today I'm going to be doing a lot of question and answers because you have more experience, and I'm also trying to learn from it as well, and so will the audience. So aside just the stock synthetics, We also have like broker created synthetics. Okay, so we do have one at Valetax currently, but we use them for contests, right? So when we have like trading contests between different clients, okay, where we have different contests between different clients, right?
Yep.
One of the one of them we use is as a synthetic market that is created right by we at Valetax, right? So we call them volatility. So they're volatility indices. Yeah. So
Yep.
so a lot of traders have been, clamoring and asking about volatility indices and the possibilities of, Valetax actually letting them trade this outside the contest because they feel it's a bit more stable, it's faster, especially for day traders, right? So do you think it's one of the best or it's a good option for traders to want to indulge in them? Because mind you, they're very fast, highly volatile, and highly liquid as well. So would you say traders would stand a better chance, day traders would stand a better chance trading synthetic indices than trading the currency market?
I mean, it depends on the person, right? What they prefer, what they're comfortable with. There's no way, some people are comfortable trading currencies. Some people are comfortable trading, the S&P 500 synthetic products. Some people are comfortable trading gold. Some people specialize in certain things, right? And you have to go towards whatever you're comfortable with. The good thing is that you have a huge available product for traders to have. And my philosophy always is being, if you could chart it, you could trade it, right? So part I love, and now, years ago I started at that point, there was not many products you could trade. To trade Hong Kong market, you had a hard time trying to find a product to trade it. Now it's easily available. So, this market now, this world now, you have so many different options to trade where you could become diversified. And that's critical. Because a lot of day traders, what they do is they trade one product. And if their trading plan says this, if it doesn't exist on the charts, then they have nothing to trade. And a lot of what happens in day trading is that they try to force something that's not there because they haven't had any trades that day. But now, by having various different products, that day trader has the ability to look at through 2 or 3 different products now and look for their setup. And they'll see it and then they can trade it. So they're not desperate to make something happen and violate their trading plan. So to me, diversification means now the trader could really sit there and trade their trading plan and not deviate from it and get into scenarios where they're violating a trading plan just to put on a trade to make money that day.
So in other sense, you would say if there is a possibility for the trader, right? Because you said it all boils down to the trader himself, yeah? If it's something he's comfortable and he thinks he can manage the risk and manage the trade and, find a strategy around it, you would advise that if it's possible and available for them, they can, of course, go for it and trade it.
Yeah, I mean, my success, I can tell you this now as a trader, is because I'm diversified. I don't go and look at certain products at all. I look at the whole universe of products. I scan for my setup, and wherever it is, I trade it. So I follow the money. So 1 minute may be gold, 1 minute may be currency pair with dollar, 1 minute it may be silver, 1 minute may be crude oil. It doesn't matter to me. Diversification is the key. And so it allows me to find my setup based on my trading plan out there. And, I have one of the worst characteristics as a trader, which I'm impatient, right? So impatient people really don't become good traders. But with synthetic products and various different products out there, now a person like me that has the worst characteristic to be a trader can be successful. because now I have a huge number of products where I can look for my setup and find it within various different products and trade it. If I didn't have various different products and I'm looking for a certain setup, I can't find it. Now I'm going to get a little antsy and say, okay, how am I going to make money today? How am I going to make money today? And, you don't get desperate to trade at all. And that's the best part now is diversification. So my philosophy is diversification is key, and that's what synthetic products does, right? Whether it be, so even created for a contest like Valetax does, you have the ability to trade. A chart is a chart. That's basically my philosophy, right? If you could chart it, you could trade it.
Very true. But then there is another major concern there that's been brought up by a lot of professional traders. They believe synthetic indices, right? Which is like the created ones, the ones like the volatility in the indices and indexes and whatnot. They have been concerned saying things like it feels more like gambling than it is trading because of the speed and the returns and the results. Like a lot of people usually don't do a lot of mental processing, a lot of analysis around it to just, probably draw two lines, find support resistance. And then because of how fast the market moves, there's a tendency for them to over risk and over leverage on their position. So it feels more like gambling than it is trading. What would you say about that?
There's so many opinions out there, but to me, everything in life is about yin and yang, right? There's pros, there's cons to everything. So, of course, you have the ability to be diverse with all these synthetic trades, the products. But of course, there's always going to be that negativity that you're going to get from a lot of people. The key is that chart it, you can trade it. That's my philosophy. Doesn't matter the speed and the volatility, everything. You could see that on the chart. Right. So someone talking about they're faster than these products and this and that. Well, you could see it on the chart and you could adapt to it. So, I don't listen to all the pros, cons, or everything out there. That's why I'm not even a fundamentalist at all. I just look at the chart and see what I see. If I see money going one way, that's the which way I'm flowing. So I'm following the money, not to what people are talking about at all. They could say this is too fast. Some people say some of these synthetic products are manipulated because they could have programs this and that. There's so much talk about that, but at the end of the day, if your pattern is in the chart, then you could trade it. That's all that matters, and you eliminate all the noise out there, this and that, and that's all that matters.
So trading in charts, proper risk management makes it possible for any trader to trade any assets.
Yeah.
So at the end of the day, we don't have to bother ourselves with saying, "Oh, I'm not a stock person," or "I don't know how to trade stocks." For as long as your technical analysis is right, your risk management is on key, and you have the basic knowledge and understanding of risk to reward, and you have also the basic understanding of probably chart patterns and have a system that works for you. That's necessarily all you need to trade whatever instrument.
Yeah, I mean, like for example, you say synthetic options. A lot of people say are manipulated because they're created from the main product. Well, the main product is created by a centralized company. Well, they can manipulate too. So I mean, what's the difference, right? The only place that you really don't have much manipulation, as you call it, is a decentralized market, right? But even in that, you have a lot of volatility, a lot less movements, and various different things. People got to stop looking at the internet, looking at all the negativity, and just become a trader. Just trade. Take out the noise. Enjoy it. Look at the charts. Find your pattern that you love, and just trade it consistently with money management. And that's really where you're going to become a real trader and be consistently profitable.
I feel like you just spoke to me because I have a problem with trading. I used to be a very diversified trader. Yeah, I would trade any instrument, whatever instrument I saw to trade. I would trade. Uh, I would trade from stocks to indexes to currencies. Metals. I would trade everything. But at some point, the internet kept throwing this narrative about picking one or two pairs and sticking to them, picking one or two pairs and sticking to them. And at that very moment, I lost touch. What happened to me was I started to trade only a few instruments and couldn't find setups. So I could wait a whole week to find just one setup to trade because normally I'm not a day trader. I don't day trade intraday, probably intraday, but not intraday. And it took me a long time to finally find a balance to having to sit and wait for trades. So right now I'm just like a swing trader. So I could wait days on days on days on days to just find one setup to take that trade. But like you said, when you have the ability to look at the chart, analyze the chart, find your patterns, your strategy, and that gives you access to trade broader, spectrums of assets, wherever the class may be. But I think the major problem that some brokers have with trying to offer synthetic to a lot of traders is these traders start to actually gamble. And you know how traders can act. The moment they start to gamble, all of a sudden it's not their problem, it's your problem. It becomes the broker's problem. Yeah. So I feel like a lot of brokers are trying to avoid all of these things. But I also do believe that synthetics are not a bad idea. I personally have traded synthetics in the past. I think majorly one of my major profits withdrawal ever from forex was from trading synthetic. Right, I did enjoy it for a while then before it became all crowded, and then there was more liquidity to go around in the market for a lot of persons. Yeah, and like you say, this quote unquote manipulation when we all had that manipulation thought, you know. But at the end of it, it was just basic risk management and price action principles that worked. I think traders these days complicate the market with a lot of trading systems, BTMM, ICT, SMC, and all of these things just becomes so much noise for them that they think everything now is manipulation. So everyone thinks the market is highly manipulated. But I want to believe that with time, synthetics would be allowed for day traders. But do you also think there's a possibility that day traders will gradually swing away from currencies fully into synthetic trading if the market becomes, very populated with synthetic offerings from a lot of brokers?
I don't think that's wise, in my opinion, because you have cycles that happen. So sometimes currency markets, majority of the pairs go into consolidation patterns, and at that point,
Yeah.
synthetic products like S&P 500 are moving. You have to go where the money's flowing, right? And like, for example, last week, the Swissy pair was the trade last week. Last night,
Yeah.
the dollar pair was moving, right? So things are changing and rotating, right? And you're going to get to a point where some market cycles, currencies are really doing nothing at all. The average pip
Well,
movement of currencies could be 50 pips that week. And at that point, gold could be moving. So what are you going to do? Just sit there and not make money by looking for 50 pip movements, which really are not going to give you much good reward risk? No. You have
yeah.
to see things are rotating over and over and over. And typically what happens is when synthetic products are moving, currencies are consolidating and vice versa. So if you're diverse, you have the ability to pretty much still consistently, look for opportunities with your trading pattern. And that's the key is find a trading pattern you like, and then just take that pattern and assuming you back tested it where you had good results, take that pattern and just consistently trade it for various different products. And you'll find out that you'll be a lot more successful than trying to do very many different things. And that's what a lot of retail traders don't do. They're not successful at all because they're not trading one pattern. They're trying to trade many different things. And there's no way you're going to be able to do that at all. You got to find one pattern you like and just trade it
That
over
works.
and over, right? And you yourself have said in ValeTalk that you're a contrary trader, a counter trend trader. Would you agree?
Mm.
Okay, so if you're counter
I
trend,
mean, we could agree to that by my gold trade currently.
right? So you're a counter trend trader, right? So now what are you going to do if you only look for gold? Gold's going down, 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 as you know it was going down. You're a counter trend trader. If you don't get your setup to go bullish, what are you going to do? You're going to sit there for weeks, not do anything, not make any money at all. So where's that going? It's not going to get you anywhere, right? So the only way you're going to be successful is looking at various different products, and hopefully one will now give you the pattern that you have based on your trading plan to trade, right? And that's a big difference. At the same time, remember, you also say you're a counter trend trader, but that means you're not following the crowd. So if that's the case, why are you looking at the internet and what they're telling you? You should, right?
Yeah.
You make more money being counter trend than trend trading, believe it or not. It's just you got to find the setup that you like to go from there,
Very true. Very true, because it even makes better sense. But to answer your question, why I look at the internet is the reason why I look at the internet is a bit different. Yeah. I'm not looking at the internet to understand or to be in line with where everyone is heading to. I look at the internet and I look at the fundamentals. I look at the sentiments in the market to have an understanding of where everyone is going towards, so I can bet against them. That's the whole
perspective. When I see on social media, I'm talking about gold going down, 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 I'm thinking bullish. I'm thinking
exactly.
Because you continuously hear statistics where they tell you that 98% of retail traders fail. And the reason why is they're following the crowd mentality, right?
Yeah.
And that's the key. You don't want to do that. You see what I'm saying? At all.
The herd mentality.
Yep.
It's one of the major reasons why a lot of traders keep losing, because everyone thinks a certain way about the market when it comes to trading. They think if you're not making a whole lot of money, you're not profitable. If you're not trading the New York session, you're not being a good trader. There's no trader who shouldn't be trading. Who doesn't trade the New York session? If you're trading the Asian session only, you're not a good trader. You like trading ranges. There's just a whole lot on the internet for a lot of people to believe in. But like you said, the main thing is about being the trader, yeah? Coming to your charts, finding something that works, and applying it over and over and over and over and over again to do it consistently to make sure you get the better returns from it. But talking about consistently, what is your view on the AUD USD? We've seen the AUD USD break previous highs and moving as rapidly as the XAU USD moved past 2 weeks. And just for those of us watching, in case you don't know, the AUD USD and the XAU USD have some sort of correlative advantage where they are positively correlated, right? So Manesh, what do you see currently on the AUD USD? So I'm just going to put up my AUD USD on the 1 hour chart.
Share charts real fast.
Yeah. Please do.
Because this is actually a trade. That's what I was mentioning last week. Switzy was pretty much the trade. Last night, pretty much a lot. We entered a lot of dollar pairs, believe it or not.
Okay.
This was one of them.
Your chart can come up.
Hold on. So let me show it to you. And I'm just going to keep it clean. I'm going to use Haki Nashi candles to keep it clean today, not do it with anything. And this is just the enhanced version of candlestick patterns. And you could see here clearly that this is a bullish trend here last Friday here. And then you could see it started pulling back here. And then you could see here, this is pretty much Sunday right there. This is when the markets open, which is right here. This red bar is where the markets opened yesterday, right? So you could tell this is a bullish trend. You could tell this is profit taking. Not much. If you look at this from a Fibonacci perspective, this is 38.2% retracement, not even a major pullback at all. So this was minor profit. taking. And then you could see here, what it did was it went down at the first hour of the market opened yesterday. And then basically the second hour, it went bullish here. So when it went bullish here, and after that bar here, we basically had a breakout order up here above that bar right there. And that pretty much triggered. And you could see here, we went to sleep, woke up, and you could see we're up right now, a couple of 50 pips or so, 30 pips or so, and so forth, and going up. But overall, we picked this pair because if you look at the weekly time frame here, you could see we started a bullish trend, profit taking. We went up here, then we came down. We retraced this entire movement up. So it looks like we're entering a consolidation pattern now, where this is the bottom there. And then we got our first bullish bar here, and it followed through right there. So July 20th, this is a bullish bar here, and it's followed through. So now it's trying to retrace this entire movement here and come all the way back here. So this is pretty much entered a consolidation pattern right now. And all it's doing is swinging from here to there, and now trying to come back up. And that's one of the reasons why we looked at going bullish on this. But this initially, you can see, is huge going up. You see that?
Yeah.
So this the pair this week. Last week you had this one, which pretty much was good. And you can see here from a daily perspective, right there last week, this just continued to follow through on the last couple of weeks here at the beginning of August. This has taken off to be really strong bullish and keeps on going. But the movement really started here in July 21st. And you can see that them going up. You have these bearish bars, but they never closed below the previous week low at all. So yes, there's profit taking here. You had volatility spikes, but this is still bullish. And you can see it carried on going forward. And you look at the weekly, you could see that we pretty much this last week got back to here, retraced this entire movement down. You see that?
Yeah.
So, but dollar right now, pairs are moving. So you have the Australian dollar that's moving, and then hold on one sec. Then you have the pound USD moving too. You see that?
Yeah.
And you can see this is moving here. And if you look last night, you could see you had a profit taking here. It continued, and today it's supposed to go up, and that's exactly what it's doing. So if you look at this in a small perspective here, you can see it went up here, but now basically when we woke up US time, we kind of consolidating. You're starting to see some weakness here. So that's my perspective there, right? So you want to share your charts?
Yeah. Let me share my chart. Okay, so I would go back to AUD/USD. So for AUD/USD currently, mind you, I totally agree with the insight on your pairs for the AUD/USD and the USD pairs. But basically, let's start with the DXY. So on the DXY, I noticed that the XY has remained bearish after we got. I think this was softer job reports. Softer job reports kept us bearish. Then inflation data from August kept us bearish too as well. Then last week as well, we also saw softer inflation numbers, no effort for the USD to get stronger. So we're still pushing bearish. And not just that, but when we look at the weekly for the DXY, we see that we've halted at this area here for the DXY. So just going to clear this chart here. So this resistance point is holding the DXY solid around this area here. previous support levels from 2023, 24 as well, and even a resistance point at 25, holding this level down critically. So we look at the on the 1 day, we see the trend still remaining bullish, but we're kind of finally breaking out of the trend line. Okay, and structurally, this would be the most recent low here to hold the dollar. Anything below this level, I think we're just going to see the dollar come. We're going to see the dollar come crashing down, right?
Yeah.
But with a bearish dollar, it is fair enough to say everything against the dollar currently is bullish. But for the AUD, for the AUD USD, I was hoping to get some sort of correction around this area here for the AUD USD short term back into the previous broken level, which is this area here.
Okay.
So some short sells. So just to get some short sells from this area back here, and then we continue. Let's look at that on the 4-hourly time frame. So on the 4-hourly time frame, we'd see this huge break of this level here, which was like the previous swing high for the 4-hourly time frame with no correction whatsoever. So I was hoping to see prices pull back in bullish a bit and then return to revalidate this area here into a good previous resistance down support before a continuation back to the upside. What do you think?
No, I agree. It definitely needs to pull back now. We had an upward movement. And it's Monday too, first day. So it definitely needs a little pullback. If that pullback is going to determine if it's going to keep on going up for the rest of the week.
Yeah. So that's just the idea for the AUD USD. So I'm hoping to sell slow. I'm hoping to sell slow on the 15 minutes time frame and get some sort of change in character, right? So I want to move from the bullishness into some sort of bearishness on the 15 minutes. Move bearish a bit, and then I would take short sells back into this area before a possible continuation. So that's just like my current view and what I'm going to be, paying attention to for AUD USD this week. For XAU USD, we currently have.
Before you go that,
okay.
Can you go back to DXY on the weekly? I'm not sure if all everyone heard what you said, because it's very, very critical what you said. Go to the weekly again for me.
Okay.
Shrink that down. Yeah. And if you zoom in on that level, zoom in, there you go, right there. I'm not sure if everyone realizes that level right there. That's a major level there. If you shrink it down, move it a little, that is a critical level there. If it holds that level, then it can go up. If it breaks that level, we're about to go down drastically and possibly. That's a major level there for the DXY, and it's pretty much like that for all the dollar pairs. So you're at a very critical level where you really shouldn't be. You should be bouncing off that level by now, and you're not. And you're pretty much entering a very danger zone now, where things could change drastically for the dollar going long term, right? And that's very, very critical. I'm not sure if everyone heard you say that a lot, but that is a major level which we're looking at, and that will affect your long-term view for the dollar, believe it or not.
Yeah, so I'm just going to everyone cycle it out for them to see. So we have one point here where prices acted as a resistance in 22. Then we had this point here where prices acted as a support in July of 2023. Then we also have this point here where prices acted as a resistance again, which was in July 2025. Then we also have this same area here around November, and this was also in 2026. And now we have prices back here in 2026 of July, August. So anything that makes prices break below this level, we're coming down definitely. So we're at crossroads, yeah. Like you said about XAUSD, it has to make up its mind, right? So the dollar has to make up its mind, and currently we have the FOMC meeting minutes this Wednesday, which would be giving us insights about the Fed's direction for interest rates and their concerns about inflation. We saw CPI, we saw the consumer price inflation come in softer than expected last week, but PPI remaining high, which was just trying to signal us to let us know that inflation isn't really all good yet. Because if producers are getting higher cost of production, it means they're definitely going to pass it down to the consumers over time. So with that being said, we're hoping to see if the Feds are going to keep interest rates steady, but we see a lot of the interest, the Fed governors calling for possible rate cuts. So a rate cuts would mean that the dollar could actually go weaker if we get a rate cut. So we are just at, I think we're going to consolidate onto the XY at this point for a bit. Probably the whole of this week up to next week, we might just see steady consolidation, except if something happens to break this level this week, then we might see if the following week would revalidate that level. So let me just clear out this drawings. Okay, so let me clear out this drawings. So this level is a very critical level when it comes to the dollar as it stands right now. It will dictate if we're going to continue to see also higher gold numbers, or if we're going to see gold start to return at the 4,500 level. What do you think about gold? Do you think gold is going to get to 4,700?
On gold?
Yeah.
Okay, let me go back to gold. I mean, there's a possibility you could. It's just right now, you have to kind of wait and see what happens this week, right? You're at that critical stage now where you're looking at it. And if you look at it from the weekly perspective and you look at the last downturn move, we're pretty much at the 50% retracement.
Yeah.
Right? This is do or die now for gold, right? Is it going to keep on going up, or is it not going to? And that's going to be the magical question. A lot of people are looking at that 50% retracement and are stopping buying or doing anything, and they're waiting to see what it does. And this kind of controls a lot of it there. If you look at it from a daily perspective, this is still bullish. You really don't have any really movement right now to go down yet. And you'll know a lot maybe at the end of today. So let's see what happens by the end of today. When we start breaking the lows, then we can. But we did go up with a lot of volatility. What goes up with volatility always comes back. So there's high probability that this could end this week, and we start to move down to retrace the huge movement up. But only time will tell. Right now, it's too early to determine what this is going to do.
It's too early to determine, but let's play what should we call it? Let's play devil's advocate. Yeah, because this is kind of my my place of interest. Yeah. So we've seen this area. So the key areas right now for gold is 3,000, 4,380 and 4,440, right? 4,400 thereabout. We've tested this level as a resistance. We've tested this level as a support. We broke through this level. Okay, we broke through this level early on in March and went and sat directly on top of this level before this push, before the last lower high. It took prices all the way back to 3,800 areas. Then now we also tested that level in June. We tested 4,380 after the break. That was the confirmation retest of the break. And then now we've come back to this level. But at this current level, there's something I'm seeing. So if I zoom in closely, we'll see the prices have tested this level not once, not twice in the past couple of days. Okay, so we had the first push through the bulls, through this level. We went through 4,389.91. We also went as high as 4,000 434. Prices rejected. The bulls came in back at 4,440, which is, just slightly above that level. Then we also saw the bulls try to go higher again at 4,450 and got rejected. And then we also saw the last bullish candle here try to go back above this level, but failing to go above this level. So sellers pushed prices all the way back to 4,311 and buyers tried to go above here. Then we had this candle from the open of the day try to go above this level and it's currently being rejected. I'm betting on a close below 4,330 with signal bearishness for me to come all the way back into these areas, 4,100 areas.
Yeah, if that happens, yes. That's the question, right? I mean, you got a battle between the buyers and sellers at those levels right now, and they're just going back and forth to a point you really can't see what the bias is, right?
Yeah.
And yeah, if it gets below that level, definitely it'll look a lot more bearish and retracing the whole volatility movement up. But the question is, will it get to that level and break it, or will it continue to go high? Is this what you're seeing right now?
Go high.
Go up. That's the magical question.
But well, like we always say, we don't decide for the market. The market trends and then we follow. So we're going to be waiting to see. I personally am good. So because from the 4-hourly chart, we can see this. We can see this trend, right? This was the bullish consolidation trend to back into this level. So we had lows, highs, lows, highs, lows, highs, and then we finally taking out this consolidation structural low here at this point. And then prices have, tried to push above and halted at this level. So we're still at this present resistance level. And looking at that, I would say that was one of my reasons for taking the sells earlier on the XAU-USD, right? So that was my reason for taking the sell. But if I can get another break below 4,368, okay, so if I get something of this nature again and a test back to this level and prices close below the 4,368 again, I most likely would go short. So target here first, secondly, and then probably just hold the trade. If that happens, if the market provides this, then I would most likely go short.
Yep.
If that happens. So that's my view on XAUUSD. And if Manesh agrees to that view, then I can say it's our view.
If it happens, yeah. If our view happens, yes.
All right.
That's the case. So what will the market do, right?
Yeah. So we just have to sit and watch. Right. This is the point where we sit on our hands.
Yeah.
For XAUUSD. Patience. So guys, if you're still watching, don't forget this is ValeTalks by Valetax. This is your number one place to be at every Monday, just to kind of have an overview of the markets, of what you should be expecting fundamentally, technically, and also learn new things on the show. Like today we spoke about synthetic indices, and it's important that, bring light to certain instruments and assets that can be traded in the market, not just currencies or stocks or or equity baskets and all of those things. We also have something called synthetic, which is part of the things that a lot of traders would are clamoring for, and hopefully someday we might get to offer synthetic outside contest to a lot of our clients when the time is right. But today, most importantly, is pay attention to the XAUUSD. This is the outlook for the XAUUSD for the week, and if you're yet to watch the next move by Valetax, please feel free to just type TNM by Valetax on your YouTube and enjoy the episode for this week and have an idea of macros to be expecting, idea for the XAUUSD and where to potentially make your entries from. And of course, it's always important to manage your risk as a trader. But with that being said, we want to say a very big thank you. And if you're yet to start using ValeTalks as your broker, please feel free to head into our bio on YouTube, Facebook, Instagram, or anywhere. Click the link in that bio, get yourself registered. With as low as $1 minimum deposit, you can start trading with Valetax. Until next time, it's bye from myself, Manesh, and the production team behind the scenes. See you guys next week, same time, same place on ValeTalks. Cheers, guys.
Thank you.
Bye, Manesh.
Bye bye.